What if student loans had a 0% interest rate? If student loans had a 0% interest rate, higher education would become more affordable, reducing the financial burden on graduates. This change could transform career choices, economic mobility, and the overall economy. While it would provide relief to millions, it could also impact government budgets and financial institutions. Reduced financial stress for graduates. Many students graduate with significant debt, which often takes decades to repay. With a 0% interest rate, the total amount owed would not increase over time, making repayment easier and faster. Graduates could focus on their careers without the stress of compounding interest. More career freedom and entrepreneurship. Currently, high student loan debt forces many graduates into high-paying jobs they might not enjoy, just to meet loan payments. Without interest, they could afford to pursue lower-paying but fulfilling careers, such as teaching or social work. Additionally, more young people might start businesses without the fear of overwhelming debt. Increased access to higher education. The fear of accumulating interest often discourages students from pursuing higher education. With 0% interest, more individuals from lower income backgrounds could afford college without worrying about their debt growing over time. This could lead to a more educated and skilled workforce. Boost to the economy. With less money going toward interest payments, graduates would have more disposable income to spend on housing, travel, and investments. This increased spending could stimulate economic growth, benefiting various industries. Impact on government and lenders. Most student loans are backed by the government or financial institutions that earn money from interest. Eliminating interest would reduce their revenue, potentially requiring tax increases or budget adjustments to sustain the loan system. Alternatively, governments might need to explore new funding models for education. Changes in university tuition fees. Some argue that high tuition costs are partially driven by easy access to student loans. If loans had no interest, universities might have less pressure to justify their high fees, potentially leading to even higher tuition costs unless regulations were put in place. Encouragement for faster loan repayment. Without the fear of accruing interest, borrowers might take a more relaxed approach to repayment. However, with a clear and fixed debt amount, some might also be more motivated to pay it off quickly since they know the exact total from the start. Conclusion. A fairer system with trade-offs. A 0% interest rate on student loans could make education more accessible, reduce financial stress, and boost economic mobility. However, it would also require significant financial restructuring by governments and lending institutions. While it offers clear benefits, policymakers would need to find ways to ensure that such a system remains sustainable in the long run.